Hello and welcome to everyone. My name is Ikhtiar and I'm representing iFarmer here. iFarmer is an agri fintech company operating in Bangladesh. We are trying to fulfill the basic needs of smallholder farmers who have less than a hectare land to produce crops and others. So the basic demands that we are trying to meet for the farmers are access to finance, access to market, and also we are working on introducing climate smart agriculture practices and some other activities as well. So today, our focus is on providing access to finance for the smallholder farmers in Bangladesh, so who have limited access to the formal financial system. There are some informal financial mechanism there for credit and financing for farmers, but these are not very cost effective and user friendly. So it is preferable that the farmers get their financing from the formal financial system. So we'll try to answer is like why the formal financial system is not supporting all the farmers, why this is happening, what we can do about it, what have we achieved so far through our initiatives, and how we can achieve more to help this very important segment of the country. So we all needed financial support at some point of our life. Some of us got it from our parents. Some of us get it from our rich friends, might be like Mark Zuckerberg. But most of the society got financial support or credit from a formal financial institution like a bank, which have better cost structure and terms. But this is where things get complicated for this farmer. Our parents or our friends know us, they know our credit worthiness, but the banks don't know us. So the banks, they ask for 1,000 papers. They want to see our complete financial transaction history. Some of us may have these documents or financial transaction history available, readily available. But as you can see from our slide, less than 3 million of 16.5 million smallholder farmers in Bangladesh have this documentation and requirements available. That's why only 2.7 million farmers got a credit from a financial institution so far. If we go into the even rural areas, the number is like very low. So what we can see is these farmers do perform financial transaction, but nobody is recording them. So that's the banks can decide if they are eligible for credit. So let's see what we can do about it and how we get into providing this solution for the farmers. So the solution is actually very simple. We need to capture as much as financial transaction these people are making to enable banks to see them that they are doing farming, they are doing business, and they are credit worthy. So we are in a unique situation because we have a crowd-funded investment platform where individual investors can investment into firms. But at some point, we realized that larger financial institutions like banks, non-banking financial institutions are needed to satisfy the credit need for the almost 17 million of farmers. But they wanted visibility of transactional records. Then we started looking into this issue. And we realized that we can gather most of the information the banks required. We already have an electronic KYC platform, that crowd-funded platform that I spoke about, where we store important information from the farmers, their land ownership, their age, their smartphone usage, and etc., etc. We also sell agri input to the farmers. We also buy their produce. So what we started to do is to recording these important financial metrics and encourage others to do the same as well. So whenever a farmer buys a seed or fertilizer from our partner retail shops, we record that transaction. Whenever we buy their maize, we record that information. We record their land ownership, the machineries they're using for farming. We even record when the farmers are attending advisory sessions where they learn about climate smart agriculture practices. So all these information goes into one database where we see their statistics, their history, their KYC, and their galleries as well, where we see all their information. So these banks can now see them. Banks can now see the farmers, their transaction history, whatever they are doing, and they can assess the farmers. This approach integrates bits of pieces of information from many services together to create a clear picture. So this gives the banks the visibility and confidence to provide or assess creditworthiness of the farmers. So I will go through some key numbers, what we have achieved. So in our platform, we have 120,000 smallholder farmers. We have facilitated 25 million worth of credit to these farmers. And I'm happy to announce that 45% of these farmers are women farmers. So why we have a larger segment of women farmer in that sector? Because we collect the information from them, and many of our field operation people are women. So women are much likely to give the information to another woman rather than a village woman walking into a bank or other financial institution. So that's why we have a lot of women farmer in our portfolio. So from our experience, what are the key takeaways that we can take from our experience for these activities? So number one is fintech companies should seek complementary solutions that help the formal financial institution. Rather than competing with others like already established banks and other companies, fintech companies and financial institutions should find areas where their respective strength can be utilized. For example, we have field people in the rural areas. So our expertise is our reach in the remote areas where banks cannot go. So we work in a complementary way. So that's where fintech companies should be focusing on, and even government and central banks should encourage them to do that. Visibility boosts confidence of financial institutions. When they see the benefit, when they see the transaction of the farmers, when they see the farmers are more likely to repay the loan, they will expand to those areas. Forced regulation in our country have not achieved much traction. As I can say, an economic problem can be solved only through an economic solution. So last point that I want to make, we should strive to record as much as activities or transaction as possible. Businesses that provide services should seek to record as much info as possible about the transactions they do. This is one of the things that our businesses in the rural areas don't do. So they don't have visibility of their business activities, and they don't help the farmers or their clients to create the transaction profile that they have as well. So with this, I reach the end of my presentation. Thank you very much for your attention. I'll be stopping it and stop sharing my screen now. Thank you very much. Thank you, everyone.
Thank you so much, Ikhtiar, for that very exciting presentation. Now we're going to open the floor to first our judges to ask some questions, and then we'll open up for anyone else who wants to ask. So Jorge, I think I see.
Yes, I have one question. What problems have you had in the use of the APP, and how did you solve it?
Problem here is the rural farmers or remote areas, these smallholder farmers. Whatever they are doing, there is no visibility to the financial institution. So they don't know what they are doing, if they are doing the proper planting. What we did is we have field level people in the ground who are doing some other activities as well, like buying their produce, selling input to those farmers. So we have a clear picture or for these farmers. So what we did is we create a KYC platform where we record details of the farmers, like the farmer, what type of crop they're doing, like their land ownership, how much land they are using, how much they spend on input and other things. So this information actually helped the farmer or the banks to see the credit worthiness of those farmers. So previously, the banks were not really interested in to go into those areas because collecting information is a challenge for them because these are rural areas and smaller farmers. So now we share this information with the banks, and we also recommend some farmers because we also do a credit scoring based on this information that we are collecting. So banks can do their lending practices, and they're coming into the rural areas, and banks have a much better cost structure. Their lending rate is much lower than the informal lenders that we have. Microfinance organizations are doing a fantastic job in the market, but still the banks, like the traditional banks, they have a lower cost of fund. So that's how we are actually helping the banks to provide credit to those people.
Yeah, thank you so much.
Thank you very much.
Okay, thank you, Jorge. I think Kenny, did you have a question? Go ahead.
Right. So I have two questions, although I think the one might have been answered. So when it comes to scaling this, and it's good to see that you have 120,000 farmers on your database, which is quite good. From a futuristic and scaling perspective, what are the enablers that would allow for your company to scale, and what are some of the hindrances, perhaps, in terms of that? Then you also mentioned that the farmers actually do make financial transactions already, however, they're not recorded. So the data that's collected, is that data inclusive of those transactions? Because I would imagine that banks would, they wouldn't just be interested in what the farmer has in place and their gallery and KYC, they would also be interested in the history and financial behavior in terms of being able to pay back and so forth. So does that information also include the financial history as well? Although you did mention that you do credit scoring, that can probably be used by the banks as well in their own decision making. So those are my two questions for now. Thank you.
Yeah, thank you, Candy. Very nice questions. Thanks for asking. The first thing is scaling challenges and what are the enabler and what are the challenges. So enabling is these small farmers, they always need credit. So there is always the demand side is always there. Number two is what we do several things. And we can say it's a 360-degree activity that revolves around the farmers. For example, we have a network of almost 14,000 input retailers who are selling seed, fertilizers, pesticide, and et cetera, to the farmers. So we have a larger networks. And we also buy the produce that the farmers are producing. And we also have an investment platform so we have the infrastructure in place. If we want to expand into a geographical area, we partner with the retail shops, we partner with the collection centers there have, the local markets there have. So scaling is, I should say, our already established infrastructure is the enabler here. If we say about the hindrances, number one is collecting the information. The infrastructure to collect information is a challenge. Because if we go into the retail shops, I'll come to it in the next question, is when farmers are buying input from a small shop. Sometimes they are very busy and they might not want to spend time on recording those transactions, so how much they are buying from the thing. So we do an aggregated kind of thing. Say, let's say, rather than saying he bought this much fertilizer, this much pesticide, this much seed, we said he bought a bundle of agricultural input from that shop. Similarly, we also record the transaction when they're selling it to our collection centers. So what we do is we provide these two numbers to the banks. So the banks can see how much they're spending on farming and how much they earn from selling their produce. So this gives them a pretty nice indication of the things. We are testing out some interesting technology for the checking, like we are using remote sensing to do crop estimation, yield estimation. So we can check last 3 years yield there. So that information is also very valuable to the banks, because they understand is the farmer is managing their business properly or production nicely. So this is my second question, actually. This is my second answer to your question, is like we record all the input buying behavior and selling information. So that gives a financial profitability indication to the banks. So I hope that answers.
Thank you very much.
Thank you,
Okay,
Candy.
great. Thank you, Candy. Mel, could I invite you to?
Yeah, yeah. I hope you can hear me. Yeah, yeah. Initially, I was of the impression that iFarmer is taking on the credit risk, but after the presentation, so the main offering really is providing information, alternative data to traditional financial institutions so that they can offer credit to farmers. So my question, this is a very meaningful offering. So, and it has to be sustainable. My question is, I actually have 2 or 3 questions. How do you earn from this business model? Is it based on commission for every loan approved by the partner financial institution?
Thank you very much. Thank you. Thank you. That's a very interesting and fundamental questions about the business model. So we initially started with a crowdfunding model to provide financing facility to the disadvantaged group of smallholder farmers. So any individual who has a spare money to invest into that. So we took the money, give it out to the farmers, and the difference between the rates are our profit. So that is very nicely. But if you have to collect a deposit, or you can say investment from individuals, you have to give them more than what the banks are offering on the deposit rates. So that's why we started. The cost of fund is actually a bit higher. So we started talking to the banks because the banks can lend. Even our central bank has a mandate or mechanism to give out agricultural loans at a lower rate than normal loans. So what the arrangement with the banks is, we collect the information, we do the credit worthiness. We also recommend the farmers to the banks, and the banks will lend the money according to their own lending rates and terms and other conditions. What we do is we collect a commission on that. So we 2 to 3% commission that we earn from these lendings. But what our business model, the sustainability comes from the other activities as well, because we are also selling input to these farmers, and we also buying the produce from them. So as a collector of agriculture produce and selling it to larger institutions, we have the advantage that we know which farmer have produced which crop. So we know where we can procure these items at a better price than others. So if I summarize the thing, so our income is coming from commission from the lending. Number 2 is our sales of input to these farmers. Sometimes they're same farmers, sometimes there are others. And number three is when we are procuring or collecting the agriculture produce from the field and then selling it to larger institutional buyers in the urban areas. So these are our three sources of income.
Yeah.
Thank
Vidya, I still have two more questions. Oh, is that okay?
Yeah, go ahead.
you.
Go ahead.
The second question is, I had a chance to browse through your website, and you take pride in embedding both human interaction, alternative data, and analytics into your business model. So my question is, um, what part of your operations, I mean, where do you use analytics and machine learning in your operation? So it's because you're providing information to the financial institution, right? So it's already processed information, or will they still go through its financial institution's own credit scoring model?
Thank you very much. This is interesting question and interesting area to share. In terms of analytics, credit scoring, we actually develop the credit scoring in partnership with the banks as well. We work with them to see what are the information they are collecting. So we also added our own analytics. One thing I mentioned earlier is the information through remote sensing or satellite data, which gives us information like previous yield data, the production history of a farmland. We get that information, which is built into the credit scoring model. We also have some other information, like we have a field operation team which collects farmers' history, type, or the land usage also there, their input usage as well. Another arm, or I should say, I mentioned it in the previous, in the beginning of the presentation, is we use climate smart agriculture practices that we are introducing to the farmers. Sometimes it's in the form of advisory when we tell them what to do. And a big part of it is fertilizer recommendation. We use extensive data collected from the field to recommend the right amount of fertilizer to use, which we have seen reduce the cost of the farmers by at least 34%. The other things that we are doing is like irrigation management, smart irrigation management. We collect the information from there, like how much water is they're using. Because I don't know if anybody understands is 30% of the world's fresh water is consumed in rice cultivation. So if you can reduce at least at 20%, that will be huge. That will have a huge positive impact on the environment. So we are also using this information for that. But in answering your questions, we use analytics for in our credit scoring, in our advisory, and in activities that.
Yeah.
Thank you. Thank you. I think I answered your questions.
Yeah. And last, this is quite relevant to the study that we are currently undertaking. I'm just curious because the information that you provide to financial institutions are quite different from what they're used to in terms of lending. So I'm just curious if alternative data is really, based on your experience, is really capable of accurately predicting the credit worthiness of the farmers.
Yes, we have seen our predictions or our credit scores so far work pretty well. I will not say it's 100% accurate, but I will say it's sufficiently accurate so far. And there are some factors that actually works in this segment as well. For example, these smallholder farmers actually do need credit. So they're always dependent on credit. So they normally pay back. The only thing that happens is that there might be some delay in paying back. Let's say they're season, like cultivation season gets delayed, or they're doing a late variety, so they will pay back later on, but they will always pay most of the cases. Number two is like, since we are also buying their produce, this is the major benefit that we have, because we are buying their produce from them, those farmers who got things. So if their yield is good, their production is good, they follow our advisory, there is very little chance that they will get default. So this happens, this actually gives the banks a very confidence in this model, that they will have the money. I think in future we might be see that these repayments will be collected by netting it with the amount they will be getting by selling their items. It will be a cashless transaction that will happen at the end of the season. We're not there yet, but we'll definitely try it.
Okay, thank you
Thank you.
so much.
Thank you so much.
I'm going to
Thank
have to
you
stop
very
you
much for
there.
the nice questions.
Thank you so much, Iktihar, and thank you so much to all the judges for your excellent questions.